Hello. So, in last class, we had studied the theoretical concept of procedure to set off and carry forward of losses. So now I'll take you take you to practical, in the sense of numerical terms of set off and carry forward of losses. So basically, you would get a clear picture of how to set off and how to carry forward of losses in the practical situations. So we will directly move on to the illustration, but I have two illustrations for this, and uh, we'll see how to do a problem oriented through set off and carry forward of losses. So we have the first illustration. It is uh, discuss the following. X report the following income and losses for the previous year 2018 and 19. The loss from let out house property is 2,50,000. Loss from non-speculation business 3,20,000. Income from speculation business 12,45,000. Loss from speculation business covered under section 35 AD specified business, it is 4,10,000. Winning from lottery gross 1,50,000. Winning from betting 90,000. Loss from card games 3,40,000. Compute the total income of Mr. X for the assessment year 2019 and 20, showing clearly the manner of set off and the item eligible carry forward. The return of income will be filled on July 30th, 2019, November. It is a question paper of November 2018 Inter of CA, Chartered Accounts. This is the illustration from Chartered Accounts examination. So this illustration gives you a basic knowledge of set off and carry forward of losses. So then it is having all adjustment. So then we'll go with the solution. So we need to know 5 H of income. I already told you in the theoretical concept. We'll go through the H of income. So the first one is income from salary, which we won't get losses. And next one is income from house property. We will see whether we are getting a loss or income in income house property. So we are getting an income from loss from let out house property of 2,50,000. See, loss from house property let out is 2,50,000. See, you can see here I have written only 2 lakh. See, I already told you in the previous session, when you are adjusting the house property against other head of income, when you don't have sufficient fund to uh, set off the losses against the same head of income, when we are setting off the losses against other source of other head of income, we are only supposed to set off up to rupees 2 lakh rupees, not exceeding 2 lakh rupees. So then I have only taken 2 lakh rupees. The remaining amount is 50,000, which I have carry forward for coming years. So when you are carry forwarding for next assessment year, you you cannot set off that amount against any other head of income. You need to see that I have already told you in the previous session, you cannot set off any uh, house property head of losses against carry forward losses against other head of income. So moving on, next is loss from non-speculation business. So it speculation business comes under PGBP. So uh, PGBP. The next head of income is PGBP. So we are getting non loss of non-speculation business of rupees 3,20,000 rupees. So we should see we are getting any profit from the speculation business. So yes, we are getting a profit of rupees 12,45,000. So when we have a profit of 12 lakh from speculation business. You need to see whether we can set off the losses of non-speculation business. Yes, we can set off that amount. So then we will set off it. See, 12 lakh 45,000 minus 35 3 lakh 20,000 would amounts to 9 lakh 25,000 after setting off. So next we'll see what we have. See, loss from specified business covered under section 35 AD. Here, specified business losses is only set off with specified business itself. We cannot set that amount with any other head of income. So we will see do we have income from specified business. So we don't have income from specified business. So then we will directly write that amount 4 lakh 10,000 and carry forward that amount to next year. And there is no limit for specified business. You can take the amount of 1,45,000 to set off the losses for n number of years. So next is winning from lottery. The winning from lottery is under income from other source. Winning from betting is also from income from other source. Loss from card games. Here, as I already told you before, we cannot set the loss from card games to any source of income. So then we will take as a third part income from other source. First one is winning from lottery. We have rupees 1,50,000 rupees. So second one is winning from betting, which is 90,000. And loss from card games, we are ignoring it. We cannot set off that amount with any head of income. So next, these are the three heads which we add to calculate. See, this is the very basic question which I have taken. You can understand very easily. I want you to understand the concept. See, next is we need to see what is the gross total income. It is GTI. I have a note for that. I have done a note, working note. See, we have two income. One is speculation income and casual income. See, casual income is nothing but income from other source. What we get is casual income. So what are the incomes? Winning from lottery, winning from betting. So we have both incomes, which the amount which was we had as a profit was 9,25,000, which I have written here income. And the income what we are getting from casual income right now is 1,50,000 plus 90,000, which amounts to 2,40,000, which we are getting. So the total income is 9,25,000 in speculation business, 2,40,000 in casual income. So we are setting the loss of HP, as I had told you before, 2 lakh rupees, which we are setting up with other head of income, which is speculation business. Speculation business, when we are setting off, we are only limited to set off up to 2 lakh rupees. So then we are setting it, the remaining amount we are carry forwarding it for the future next assessment year. Casual income, the specified business we cannot adjust with any head of income. So there is no um, set off for specified business. So the total amount which we are having after deducting the set off is 7,25,000. How we got 7,25,000 is 9,25,000 minus 2 lakh, which leads to 7,25,000, and 2,40,000 the income which we had got from winning from lottery plus winning from betting, which is 2,40,000. So after adding the both total income, which leads to 9,65,000, which is our gross total income, which you can see in the working note 1 as I have taken here as a 9,65,000. If there is any deduction, we don't have any deduction here. So if there is any deduction, we will subtract that amount and we will take as a net total income if they have asked. See, they have asked us for net total income, so then I have done. We don't have any deduction in this problem, so then if we have any deduction, we will subtract that amount and we will find the net total income. So here net total income remains the same, so net total income is 9,65,000. And the main thing you have to focus here is the carry forward. We have two carry forward in the solution. One is from house property is which is 50,000 rupees, and another one is 4,10,000 rupees, which is from specified business of income of losses. These are the two which we are carry forwarding into for the future years, future assessment year, as per the guidelines of income tax. So this is the first illustration, which is very simple, and you can take a very concept wise, it is very basic question. The next one which I have taken is next illustration is Mr. Raju submits the following information for the financial year ending 31st March. He desires that he should compute the total income, ascertaining the amount of losses that can be carried forward. So this is the question. House number one, income from statutory deduction is 72,000, and house two, current year losses, which he has occurring a loss of rupees 30,000 rupees. He has three, and next coming, he has three proprietary business, which is PGBP. So first business is textile business, discontinued from 31st March 2018. Current year losses 40,000 rupees. It is which there is a loss of 40,000 rupees. Brought forward losses of 2000 year assessment year 2014-15 is rupees 95,000. Next business is chemical business, discontinued from 1st March 2016. Hence no profit, no losses. There is no profit, no losses. So second, bad debts allowed in earlier year recovered during this year. Bad debts was allowed in earlier year, recovered in this year, 35,000. Brought forward losses for the assessment year 16-17, 50,000. Leather business profit for current year 1 lakh. Share of profit in a firm in which he is partner since 2005, 16,550. So brought forward losses of the assessment year is rupees 50,000. Leather business profit for the current year is 1 lakh rupees. Share of profit in a firm in which he is a partner since 2005 is rupees 16,550. Short-term capital gain is 60,000. Long-term capital gain losses is of rupees 35,000. Contribution to LIC towards premium is 10,000 rupees. So long-term capital loss is of rupees 35,000, and contribution to LIC premium is 10,000 rupees. So we'll go to solution part of this problem. So first one is here is the solution. First one is income from house property. We have one income, statutory deduction 72,000, which we have taken here, income from house property. We also have a loss which is occurring in current year of rupees 30,000. We have a 30,000 loss, and we have also have a income from house property. So we are setting off the loss in a inter-ed income, which is 72,000 minus 30,000. It amounts to 42,000. So next head of income is PGBP. See, we have three business here. One is textile, one is chemical business, one is brought forward losses, leather business. So first one, textile business, we have a current losses. We have a losses of 40,000 rupees. So then we have taken the loss. And second one is, and second one is chemical business. Discontinued in the year 1st March 2016, hence no profit, no losses. We need not worry about that. So second is bad debts allowed earlier recovered during this year, which is of 35,000. We need to tag that amount. The bad debts recovered, which is of deemed business income, it is 35,000. And next coming which is of leather business. Share of profit in the firm. See, when there is a profit in terms of share, that amount of profit is exempt. So then I have written exempt. So first we need to set off the textile business losses. How will set off? 1,35,000 minus 40,000, which is our current business income. We need to see what is our current business income. So then we are, what is the there is one loss of textile business which we can set off against the same head of income, which is of PGBP. So we are setting off the losses against the profit, which is 1,35,000 minus 40,000, which leads to 95,000. So we need to see any brought forward in the year, as I told you before. So we need to see what is the is there any brought forward in the previous year. See, we have one brought forward in the losses of 2014-15. First we need to set off that amount. We need to see again we have any other brought forward. Yes, we have another one brought forward in the year 2016 and 17. First we need to set off the amount which we have received earlier, because we have the limitation for certain period. So then first which we are getting a brought forward losses is 2000 in the year assessment year 2014 and 15, which is 95,000. So then we will set off that amount. How much in profit we have? We have exact 95,000. So then we are setting off total profit of 95,000 of business income against the brought forward losses of rupees 95,000. So amounts remains nil. So we don't have any amount to set off the losses which we are getting in the year, in the assessment year 2016 and 17 of rupees 50,000. So we are carry forwarding the same amount for the next assessment year. So here we have the brought forward losses of 50,000, which was brought forward in the year assessment year 16 and 17, which we don't have sufficient profit to set off in this year. So then we are carry forwarding it for next year. So we don't have any profit now in PGBP. So moving on, we have short-term capital gain and we also have long-term capital losses. See very uh, carefully. See, we have losses in long-term capital gain. As I have told you before, we cannot set off the long-term capital loss against short-term capital loss. Yeah, vice versa is done. Short-term capital loss will be set off against long-term capital loss gain. Here, long-term capital loss will never be set off against short-term capital loss, short-term capital gain. So then we have a short-term capital gain of rupees 60,000, which we are writing it in outer column. So long-term capital gain is of rupees 35,000, which we don't have profit in long-term capital gain. So we are carry forwarding 35,000 for next assessment year. I'll repeat, long-term capital gain losses will never be set off with short-term capital gain, which we have already. We have a short-term capital gain in this solution problem. So we are not allowed to set off that long-term capital losses against short-term capital gain. We can set off short-term capital gain against long-term capital gain. You can set off short-term capital losses against long-term capital gain. So here in outer column we are writing the short-term capital gain amount of rupees 60,000, and we are carry forwarding the long-term capital loss of rupees 35,000 for next assessment year. So moving on, we have a deduction here. We need to first see we have any deduction here. We have a deduction of LIC of rupees 10,000. We are deducting that amount of rupees 10,000, and we will add all the amount of outer column of 42,000 plus 60,000 plus 10,000, which leads to 60,000 plus 10,000 is 60,000 plus 42,000 is 1,02,000 minus a deduction is 10,000, which is of rupee. Our net total income is 92,000. So here we are done with our illustration number 2. So I have covered all the aspect regarding provision to set off and carry forward and losses. I have done theoretical concept as well as the solution part of it, in the sense practical oriented of it. So you can see this illustration any time and we can take use of it. Thank you.